Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now a major recession warning is flashing on this chart right here, which is a very rare signal which is crashing the stock market and crashing the crypto market, with Bitcoin breaking below key support along with Ethereum just about to run into this critical area of support as well. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before we take a look at the Bitcoin charts today, we need to take a look at this chart right here, which is on the monthly time frame, taking a look at the real-time SARM recession indicator. And if you want to look this up yourself, it is SAHM, SARM rule. And essentially when this indicator, when this line right here crosses above 0.5, that effectively always indicates a recession in the US is just about to hit. And this chart right here is looking all the way back to the 1960s. So we're talking about many decades worth of history here. And essentially these gray areas on the chart right here are recessions in the US recessions. And so if we're taking a look at this first example right here on this chart, that's back in around 1960 to 1961. And we saw the SARM indicator right here cross above 0.5. And right when that happened, we saw a major recession in the US. And then we saw the exact same thing in around 1970, the same thing in around 1974, the same thing in around 1980, the same thing in around 1981 to 1982, the same thing again in around 1990 to 1991. And then we saw the same thing again in around 2001, that was the dot-com bubble. And then the same thing in around 2008, 2009, that was of course the global financial crisis. And then the same thing around COVID, we saw that very quick recession in 2020. And so basically every single time since 1960 that this red line right here, the SARM rule recession indicator, every single time it's gone above 50, above this white line right here, it has indicated a major recession hitting the US. And so this is one of the main reasons why we're seeing a sell-off at the moment across markets, not just crypto, but also the US stock market is selling off right now. And that's simply due to the fact that this indicator is flashing a major warning signal telling us that the US is likely about to enter into a recession. Now, obviously, there's a chance that this could just be a false signal. So yes, there's no such thing as a guarantee. There is technically a chance that this could be the first time since 1960 where it has not indicated a recession. But simply based on all of this history right here, there is a very high chance that this is going to indicate a recession coming sometime soon in the US. And in case you're completely new to all of this stuff, a recession is effectively bad for markets. Usually we see the stock market and also other markets like crypto, for example, go down during a recession, like what we saw in early 2020, around March 2020. Pretty much all markets crashed around March 2020. And so with the SARM rule currently sitting at around 0.53, just above that 0.5 signal level, effectively, once again, this is giving us a major recession warning signal. And so with that being said, taking a look at the Bitcoin charts today, this is on the 4-day time frame. And at least as of right now, the super trend indicator on this 4-day Bitcoin chart is still sitting in the green. And this will actually only flip back into the red if we confirm a 4-day candle close in the price of Bitcoin below around 56,000 approximately. And so that level at around 56,000, give or take, that is a critical level for the price of Bitcoin to hold above, because if we start seeing confirmed breaks with confirmed candle closes below 56,000, then that would be a strong bearish signal on the larger timeframes. But at least as of right now, we have not yet seen that. So for all we know, we can still potentially remain within this larger bullish trend for as long as we're holding above this level right here. And remember, we can see long periods of sideways consolidations or even short-term dumps here and there during a larger bullish trend, just like what we saw back here roughly around 1 year ago. And so that's why we need to actually wait for confirmation in order to confirm that the larger bullish trend is over by confirming that reversal signal, which at least for now has not yet confirmed. And so with that being said, taking a look at this daily Bitcoin chart, and right now what's very interesting is the DXY is actually dumping. We're seeing a major dump in the short term in the DXY, and historically speaking, when the DXY dumps, that's actually a bullish signal for Bitcoin and crypto. But this time around, this could potentially be acting as a bearish signal, and the reason behind that is because the DXY, in case you're new to all of this, is the US dollar index, and of course, when we're seeing a major recession warning signal for the US, then we're going to see a sell-off in the US currency, the US dollar. And so basically this dump that we're seeing at the moment in the DXY or the US dollar index is basically large investors moving capital out of the US dollar into other foreign currencies like the Japanese yen, for example, or the euro are currently spiking. And once again, that's likely due to this recession warning signal, with a lot of investors also starting to price in lower interest rates coming sometime soon. And when we see lowered interest rates in the US, then of course the US dollar will decrease in value because you cannot get as much yield on the US dollar if rates are lower. And so once again, typically when the DXY is trending in the bearish direction, as we can see on this chart right here, that's very usually bullish for the price of Bitcoin. But this time around, the cause for the dump in the DXY is a major bearish signal. And with that being said, taking a look at this daily Bitcoin chart, and right now the price of Bitcoin is breaking below this critical area of support, sitting in between around 63 to 64,000. And so this is essentially signaling the end of that short-term bullish trend that did actually last for a few weeks here. So we did have a decent short-term bullish trend, but right now this is signaling the end of the bullish trend. Potentially a new bearish trend could be forming right now, especially if we confirm this break to the downside below 63,000, and especially if that becomes new resistance again, that would be another bearish confirmation signal. And so when it comes to support and resistance to watch out for now, we do have a lot of support in between around 60 to 61,000 based on previous support, and a lot more support in between around 56 to 57,000. And that is a critical area to hold above. And as for resistance, we could now find resistance at around 63 to 64,000, because usually when we break below previous support, it usually becomes new resistance. And if we see a breakout back above around 64,000, we still have strong resistance in between around 67,000 to 68.3k, where we saw multiple rejections from over the last couple of weeks. And so once again, the situation right now, considering we've just broken below key support, this is now actually starting to point in the bearish direction, not just for a short-term cool-off, but actually the trend and momentum pointing bearish. And now it's also important to understand that during a bearish trend, that does not mean 100% only bearish price action in a straight line to the downside. It does not mean that, because during a bearish trend, we can see some bounces back to the upside here and there during the trend. And so just keep that in mind, nothing moves in a straight line. So if we see 1 day worth of green price action, that doesn't necessarily mean this bearish trend or bearish momentum is completely over. And with that being said, taking a look at the 6-hour time frame, right now the price of Bitcoin has just broken below this 38.2% Fibonacci level of support, which was sitting at around 63.2k, give or take. And we've seen a drop pretty much exactly to the 50% retracement level, acting as support, sitting at around 61.2k. And so just in the imminent short term here, that is currently the support to pay attention to. But if we break below 61.2k, then in that case, the next short term support based on these Fibonacci levels is sitting in between around 58.8k to around 59.3k based on this golden pocket area of support. And below the golden pocket, we also have some more supports at around 56.6k to 56.7k approximately. And with that being said, taking a look at the 4-hour time frame, zooming right into the short term here, we can see possibly a new bullish divergence forming right now, but it is important to understand that this potential bullish divergence is not yet confirmed. Because as of right now, we have effectively confirmed a new lower low in the price of Bitcoin in the candle closes here. But with that being said, we're still actually waiting to confirm the higher low in place in the 4-hour RSI. Because for all we know, if we just continue dumping here in the short term without confirming any green candle closes, then in that case, we could actually see a new lower low in the RSI. And in that situation, we would have no bullish divergence at all. And so what we actually need to see in order to confirm this potential bullish divergence that is forming right now is essentially 1 or 2 green candle closes here in the price action on the 4-hour time frame. Because just by seeing a couple of green candles here, that effectively would help confirm a higher low in place in the RSI by seeing a bit of a bounce back to the upside in the RSI. And in that situation, then we could potentially confirm this bullish divergence and expect a bit more of a bullish relief. But as of right now, we have no bullish divergence confirmed. It's just one that's potentially forming. And believe it or not, you can actually make money even on bearish price action by using short positions, for example. And if you want to trade any of these moves in the price of Bitcoin or any other crypto, personally, I take just about all of my trades over on Bybit. So I'll make sure to leave a link to Bybit down below this video in the description and in the pinned comment. And if you use that link down below this video to make a Bybit account and deposit on that account, then you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, if you use that link, it'll take you to this page right here, which is a massive lucky draw happening right now over on Bybit, where you could potentially win up to $100,000 just by trading crypto using the link down below this video. And so if you're going to be trading crypto anyway, you might as well check this out. Once again, first link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And so I'll also make sure to leave a link to Bitflex down below this video as an alternative crypto exchange. And with that being said, taking a quick look at the Bitcoin liquidation heat map, and over the last one day, obviously we've seen that short-term dump actually wiping out a little bit more liquidity sitting to the downside here, which was sitting at roughly around 62,000. And so at least for now, we still have that major level of liquidity to the upside at around 70,000 and just above $70,000. But with that being said, it is important to understand other charts and indicators that are happening, not just rely on this one chart by itself. And so with that being said, we do actually have a little bit of downside liquidity at around 59,000 and a little bit of liquidity at around 60,000, but most of the downside liquidity is closer to 59,000. And then below that level, we have a decent amount of liquidity at around 56,500 to 56,000 approximately. And so those are the importance levels to pay attention to on this chart right here. And once again, consider the fact that the momentum is clearly bearish at the moment, especially with this major recession warning signal that only just flashed over the last one day or so. And with that being said, taking a look at Ethereum on the daily time frame, and right now the price of ETH just broke below this critical area of support, which was previous resistance and support for the price of ETH, and that was sitting in between around 3150 to around 3250. And so now that the price of ETH has effectively broken to the downside here, the next area of support to pay attention to is sitting in between around 2.8k to 2950. And that is definitely a critical area of support to hold above, because we can see over the last few months, the price of ETH has found a lot of major support in that price range. A lot of the major lows have occurred in that very price range. And so once again, we should find a lot of support in that area based on previous price action. There should be a decent amount of buyers in that area. But if we actually see a break below around 2.8k with daily candle closes below 2.8k, that would be an extremely bearish signal on the larger timeframes. And so this is definitely a critical area of support to pay attention to for the price of ETH. And at the same time as the price just about to run into this area of support, the RSI on the daily time frame is also getting very close to oversold territories. And the last time the RSI on the daily time frame was oversold, it was right back here near the beginning of July, and we can see that that also occurred right around a local low in the price before we saw a bounce over the next 1 or 2 weeks. And so it's possible that the price could continue further into this area of support, but if we do that, then the RSI might get oversold, pointing towards some sort of bounce or something sometime soon to reset the RSI. And also we have a possible bullish divergence forming right now on the daily time frame. Now we still need to actually confirm a lower low in the price in the candle closes. So effectively we still need to confirm a candle close on the daily time frame below around 2930. And if that happens, if we see that candle close below 2930, below this previous low, then of course we'll have a lower low in the candle closes, while the RSI could potentially still be forming a higher low, which would be a bullish divergence. But once again, we still need to see a lot of confirmation to actually confirm that bullish divergence. It's just something that I'm pointing out that could potentially form, but it is no way confirmed as of right now. And as for the trend and momentum right now for the price of ETH in the imminent short term, obviously we're looking a bit bearish right now, but with that being said, the overall trend here on the daily time frame is basically neutral. We're in a massive choppy sideways price range. But if we break below this area of support that I just mentioned earlier, then that would change. Then we would flip a lot more bearish if we confirm a break with candle closes below 2.8k. And with that being said, taking a look at the price of Solana on the daily time frame, and right now the price of Solana is trading below this critical area of support, which was previous resistance sitting in between around 158 to 161, give or take, so right at around 160. And so obviously in the short term right now, the trend and momentum is clearly bearish, which I've been saying if we break below 170, that would be the point where we're starting to flip a lot more bearish again in the short term. And so that's what I said around 2 to 3 days ago when the price was back up here. I said if we break below 170, that is where we can start talking about a new bearish trend and the momentum flipping much more bearish. And obviously the moment we broke below 170, we've flipped a lot more bearish. And so once again, at least as of right now, the short-term trend and momentum for the price of Solana is clearly bearish, considering the price has broken below key levels of support. And so these previous areas of support should become new resistance in case we see any sort of bounce back to the upside. I would be expecting resistance around these price ranges. And as for support right now to pay attention to, we could have a bit of support at around 152 to 154 based on previous resistance acting as new support. But if we break below those levels, then in that case, the next support I'll be watching is sitting in between 140 to 144. And below that, we have a critical area of support in between 120 to 128. And if we're taking a look at the 12-hour time frame, right now the price of Solana is technically still playing out this bearish divergence, which I said in my last video is technically still active, but I said if Bitcoin or Ethereum play out some sort of bullish relief, Solana basically follows what Bitcoin and Ethereum is usually doing, but obviously Bitcoin and Ethereum had a dump over the last one day, and so Solana just followed that. But with that being said, even though the bearish divergence is technically still active, if we're looking at the 12-hour Solana RSI, this is now approaching oversold territories. It's not there just yet, so we could go a little bit lower here in the short term, but it's getting very close to oversold territories. And in case you're new to this, usually when the RSI gets to oversold territories, that's a signal just in the short term that we're kind of reaching the lower limit in the price, and we're due to see a bit of a bounce or at least some sort of sideways consolidation to help to reset the RSI. Because the RSI can be reset back to the upside, back up towards more neutral levels by seeing either short-term bullish price action or even just sideways price action can also help to reset the RSI. And so once again, it's not oversold yet, but it's getting very close. So just keep that in mind here in the short term. And once again, if you want to trade these moves, which you can trade the bearish moves right here to make profit, and if you want to trade these moves in the price of any crypto, check out those links down below this video to claim those extra bonuses. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.